Stocks, well, they're rallying and yields are tumbling on the heels of May's consumer price index coming in unchanged from the prior month. Now, despite the softer than expected print, we've got the Fed's press conference still ahead, and that could actually maybe pose a risk to this risk-on rally that we are seeing. So to discuss, we want to bring in Chris Versace. He's Tematica Research Chief Investment Officer. Chris, it's great to see you. So we are seeing some optimism clearly play out here in the markets. The market seems to be satisfied and excited about this print. What's your first take of the number that we got this morning?
I mean, you look at whether you want to look at it on a year-over-year basis, sequential basis, clearly the numbers were better than what the market was looking for. That explains the market move that we're seeing. You guys covered it very well with the strong open. It's also explaining why we're seeing Treasury yields move lower, particularly for the 10-year. They're back 4.3%, right around their lowest levels since early April. So I think the takeaway here is the market is getting excited that the prospect or rate cuts are, back on the table.
And so what does that mean for people's portfolio positioning? Is there a massive kind of shift that they should be thinking about as this puts that cut back on the table, even as we're watching some of the CME Fed Watch probabilities shift for perhaps an earlier rate cut than anticipated?
Well, let me back up a second, Brad, because I said the market's expecting that, right?
Yeah.
So the question is, what should we be thinking about? And when you look at, the last year, we've seen the sequential core CPI hit 0.2% several times, June, July, October. But at the same time, in between those months and really since November, December, and the first quarter of the year, inflation has moved the wrong way. So we have to stop and think about, how's the Fed going to see this? What's the message they're likely to deliver this afternoon? Remember, they don't want to get head faked here, right? They want to make sure that, yes, inflation is moving down on a sustained basis. So they're not going to rest on any one particular data point, right? They're going to want to see continued good data. And I think that's the message that Powell is going to come out with this afternoon, potentially throwing just a little bit of cold water on the market's enthusiasm for what it saw this morning. So for folks, I would just say, hold back and let's get through the Fed press conference this afternoon before making any snap decisions on this one data point, positive though it may be.
So, Kristen, what's your advice here? And we'll find out what Powell has to say in just a few hours from now. But for investors overall at this point in the cycle, a lot of uncertainty that's clearly highlighted even in the reaction that we've seen play out in the markets over the last several weeks. And we talk about the fact that maybe we shouldn't get too excited about this print. So what does that then tell us about investor positioning and what makes the most sense at this point?
So we're getting ready for the back half of the year, right? We're going to soon segue from the mini wave of investor conferences that we have now. We'll be moving into the June quarter earnings season, and that's really going to shape expectations for the back half of the year. So, kind of what we're doing with the Street Pro portfolio is we're building our shopping list. We're getting ready for the second half of the year and any opportunities that we might see. Could that be as soon as, the market kind of cooling off after this afternoon? It's possible. Could it be when earnings expectations maybe get revised either lower or higher for the second half of the year? Could very well be. So that's how we're kind of, plotting and tacking to get ready for all of this.
What is at the top of that shopping list?
Good question, Brad. There's some other companies that we've got some smaller positions in, Waste Management, LabCorp, for example. If we got the opportunity to pick up more shares of Applied Materials, boy, we would love to do it. We've spent a lot of time in the first half of the year kind of repositioning, bulking up on NVIDIA, bulking up on Marvell, given what we see ahead. We also bulked up on Qualcomm. Again, all this kind of ties back to the AI cycle or the AI on device upgrade cycle that I think you guys were talking about quite a bit earlier today.
All right. Chris Versace, who is the Tematica Research Chief Investment Officer. Chris, great to see you. Thanks so much for hopping on with us.
Thanks, guys.